Will stock index futures recover from the lower early morning prices that were linked to investment fund forced liquidations?
Yes, in recent years, there have been numerous times when stock index futures came under some pressure due to various instances of forced hedge fund liquidation. And each time, stock index futures were able to recover, and the pressure was only temporary. And I think that will be the case again this time. Although stock index futures are under some pressure this morning, I think there will be some recovery. And I don't think this is any type of situation that will result in any long-term pressure for stock index futures.
What is the U.S. dollar outlook?
The U.S. dollar continues to trade near 4-month highs, and the greenback is likely to remain firm over the near term, especially against the euro currency, as traders remain cautious due to increasing coronavirus infections and restrictions in Europe. The euro currency has been under pressure recently as the prospects of tougher coronavirus restrictions in France and Germany weighed on the short-term outlook for the European economy. So yes, I do think the dollar will trend higher over the next couple of weeks.
Will the Federal Reserve hike its Fed funds rate before 2023, as some economists are now predicting?
No, the Federal Reserve has pledged to not increase its Fed funds rate until 2023. And I don't think they will be in a position to or need to hike rates early. However, I do believe that longer-term interest rates will probably drift higher.
Will this week's USDA Acreage report be key to prices?
Good morning. These are the answers to the weekly Kickoff grain questions. The answer to question number 1. We have a very important USDA report this week on March 31st. Historically, it's important with first intentions of what farmers are going to plant in acres this year, and also the March 1 grain stocks. This year is even more critical because the stocks for corn, soybeans, and wheat are going to be lower than they were last year, especially for soybeans. And so where the numbers come out versus the average trade guess could depend whether the market continues to sell off from its recent weakness or makes a bottom and trades higher. For acres, we need at least 92 million corn acres, 90 million bean acres, and 45 million wheat acres to produce a big enough crop, weather permitting, to not only satisfy next year's demand, but allow the carryouts to increase from levels right now, especially in corn and beans that are historically low.
What is the latest World 2021 crop weather outlook?
World weather has turned a little bit more favorable over the last 3 weeks. Argentina's getting rains, the U.S. Southern Plains are getting rains, U.S. Midwest is getting rains for planting. The Northern Plains, U.S. is still dry, Europe's still dry, and Brazil is still dry. But in general, there's not enough problems yet for the funds to increase their long positions. It is expected that here in the United States, April weather will be normal and that the corn crop will get planted, which could add additional pressure to the corn market prices.
What is the latest grain futures technical signals?
For the corn and soybean market, we have been trading mostly sideways over the last 30 to 60 days. Wheat market has been trending lower. We've seen a steep drop in meal prices and also a steep drop in soybean oil prices. Today, the corn market and the soybean market is near some key support. Again, technically, the market still has some fund longs in corn, beans, oil, and has now turned short Chicago wheat. Markets have yet to get oversold, and so if we have good weather, the technical trend continues to be lower in the marketplace until there's a reason for the funds to come back in and buy the futures market. Outside markets, we're still looking at a little bit higher dollar, and that is raising some concern about commodity prices rallying. We're also seeing a little bit of an increase in the vaccine and that is helping the economy, but also an increase in virus that could stage more lockdowns, especially in Europe, and that could delay the economic recovery. So we have to watch the virus, we have to watch the vaccine, we have to watch interest rates, and we have to watch money flow.